Okay, good morning, guys. Final day of the week. Here we are, arriving at the midpoint of quarter three. So halfway through the middle month, and lots to talk about, of course, as ever. And I don't think I can really start anywhere else other than the price of oil. So let's make this chart bigger. Let me just take you back. I showed you this weekly chart yesterday, and what happened, and I'll zoom in a little bit, or actually it doesn't look like it on there. No, yeah. So I'll zoom in a second, but just to kind of give you a look at the long term on the continuation basis with the March low at 42.03. So that did, I know you can't quite see the wick on this weekly candle that we're currently still completing, but of course we did go below this yesterday, so it wasn't until late on though, unfortunately. But yesterday's low, 41.89, or actually it was, I guess, officially today's low, in that the big kind of move, and I'll zoom in a sec, kind of came overnight, around about midnight. We had the pop lower. I was looking for that yesterday, but in the end it never happened in European hours. But so this is obviously very important, and actually it's really important what happens now. Now we're here. Now we have made a new low, and if I zoom in now, just to kind of get a clearer picture on the shorter time frames here. So I've got 42.03 as the line. That was the March low. We flirted with this in the afternoon. Of course, we had a big sell-off from midday, big move to the downside, and arrived down at the bottom here, going, just before and going into the European close. We never actually quite tested that price exactly until after 6 o'clock. We tested it once. We popped down about 10 ticks below it, 41.92. Tested it again. The low 41.91. Then things calmed down. It wasn't until last night, right at the open, really, the Asian session at 11 o'clock, that we finally got the kind of major breakout, the breach that perhaps I was looking for yesterday. But a nice extended, accelerated breakout down to 41.35. This is the new 6-year low. You've got to go back to 2009 to find a barrel of oil this cheap. But of course, we've stabilized pretty quickly. And what's happened ever since that point, so over the last several hours, we've just been locked in on $42. So we've tested it, we broke it, but we're still there. It's like a bit of a magnet at the moment. So actually, I think today's session is very important. So if we look on the daily chart, well then actually the close yesterday came at 42.23. So actually yesterday's session, really, we tested this level and it held. Now, overnight it broke, but we're kind of still there. So I'd say this price point is still in play. We're 33% off the May high. Yesterday, I guess, some of this move was as a result, well, we got a bit of dollar strength, I guess, early on. That then reversed. But actually, there was news from BP yesterday. So one of the issues that's just helped to lead or continue the pressure and make sure this trend to the downside, this phenomenal trend, extends, was one of the BP's biggest refineries has been closed due to, well, looks like a leak. It's just that this refinery that's been shut, temporarily shut, and we don't know for how long, that takes in about 250,000 barrels of crude oil per day, refines that crude oil into its usable energy forms like gasoline. This refinery takes its crude oil from Canada, but also from Cushing, Oklahoma being the biggest US crude oil storage facility. So this has helped on the supply. So this is a positive supply factor for crude inventories. Obviously it's a negative for gasoline. And we've actually seen, I was surprised to read this morning, despite the fact that crude oil is down at 6-year lows, gasoline at petrol stations in Chicago actually spiked higher and trading up around $2.50 a gallon. That's like a 30% increase. So because we're getting large increases in crude inventories, but refinery problems and refinery bottlenecks, exacerbated by this BT refinery being closed, you're beginning to see the crude glut, the excess supply, get worse, but then at the expense of the gasoline supply, which is getting, getting better. The gasoline supply is getting smaller, oversupply that is, and the crude oversupply is getting worse. Add on to the fact we're moving towards the end of the summer here, and this for the US is what we call the big driving season. Everyone goes on holiday, they tend to drive, and so we're coming to the end of that, and this is a period of a lot of demand from the US, so that's kind of coming to an end as well. So, crude oil, very much still the market to be looking at. I think today's really important. I think if I just finish on the weekly chart, where this week closes, look at this, we've had 1, 2, 3, 4, 5, 6, 7 down weeks in a row. Definitely this will be a down week. Perhaps not definitely. 43.50 is the price point we opened at. Who knows? We could rally up there. We'll have to wait and see. But for now, it looks like 7 straight down weeks in a row. And I think it's very important where we close. Where this weekly candle closes is important. Technically, are we going to get a confirmation of the break of $42 and a close down in the 41s or even in the 40s? We'll have to see. If that happens, then, your seatbelts should already be buckled. If they're not, you need to get them on, because if crude drops below $40, this takes this situation into a whole new arena. And what that might mean for the shale industry in the US, who knows? But from an equity point of view, you've seen the energy sector come under heavy pressure this week as a result of this. Now, of course, it's been helped along by the big story of the week, which is China devaluing their currency. And if we kind of look at that, what happened overnight, and perhaps what's just meant conditions at the open this morning have been quite calm. Generally, equity markets are higher. The DAX is 0.5% higher, just made a new high for the session, despite the fact their GDP, German GDP, disappointed. I'll talk about their GDP reading in a second. But if we just think about the week as a whole and think about China, so obviously big moves on their currency. They devalued it by 1.9% on Tuesday, by a further 1.6% on Wednesday. Yesterday they kind of left it where it was. Actually, this morning they fixed the price 0.05 above yesterday's close. So the currency, the yuan, has stabilized into the end of the week. But if we just look at how some of the different assets have been affected by this, so let me just give you some stats. In terms of the ripples across other Asian markets, let me just find my stats here. So, the Taiwanese dollar, this is since Tuesday, so since Tuesday's open, which is when the People's Bank of China made the move and devalued their currency, Tuesday's open till right now. The yuan, onshore yuan, has devalued 3%. Offshore yuan is down 4%. That's the weakest level since 2011. In terms of the ripple effect across Asian currencies, the Taiwanese dollar, just this week, I say this week, over 2 days, was down 1.81%. The Malaysian ringgit down 1.8%. The Indonesian rupee down 1.6%. Korean won down 0.9%. Aussie dollar taking a hit. It's had a dramatic effect on commodity prices because of the fear that a cheaper currency, a cheaper yuan, will mean China can afford less. It also points towards a more severe economic problem than we thought if the People's Bank of China are having to go again with even more extraordinary stimulative policy. So commodities, WTI crude 6% down on the week. Brent crude has fared a hell of a lot better. It's only down 2.3%. Aluminium, that's down almost 3%. Copper, down 2.4%. So major weakness across the industrial metals. Gold's been the beneficiary and is up 1%. In terms of equity markets, in Asia, Nikkei's down 1%. The Hang Seng's down 2%. The COPSI is down 1%. In Europe, though, this is where markets have been battered, and the DAX taking the lead. The DAX is down 5% on the week. The Eurostoxx 600, though, down 4%. So it looks like core Europe suffered more than the periphery, although periphery is down as well, with the FTSE MIB down 3.2%. So, it's definitely, it's the big event of the week. It could, really the big event of the month, and the DAX is still pushing back higher here, actually. So a bit of an upside move here on the DAX. But it's definitely been the big story of the week, if not the month, and some dramatic movements across markets. Now, let's just focus in on today, because this morning we got a lot of data. We've had data already. I'll talk about the DAX in a sec. Let me just bring the calendar into screenshot here, because we've had GDP figures from France and Germany, and we're about to get GDP figures from Italy in 10 minutes' time. These are the first readings for quarter two. They're very late. We've had most of the rest of the world report their preliminary quarter two GDP figures at the end of July. So Europe coming in late here. So I'll talk about Germany and France. Well, let's talk about them now. So Germany, we were expecting, this is at 7 a.m., we were expecting growth of 0.5%. What we actually got was 0.4%. So here's the chart. And, it's obviously worse than expected, but by the smallest amount. So plus 0.4% growth. There's kind of two ways you can look at this. You could either say, 0.4%, better than quarter one, which was 0.3%, showing a positive trend. If you're an optimist, you can get some kind of positive trend out of this picture. If you're a realist and you're looking at it rationally, it's kind of flat. But 0.4%, you could say, decent is better than quarter one. At least we're building. But then, if you're bearish, you could say, well, hang on a minute, 0.4% growth when energy prices have collapsed, when the euro is phenomenally weak, certainly relative to last year, and yet still these economies can't generate, meaningful growth. So there's definitely two ways to spin it, but the German GDP figure was slightly lower than expected. For France, well, that was definitely lower. We were expecting plus, let me just check. For France, we were expecting plus 0.2%, and it came in at 0. So that's definitely a big drop-off from the quarter one growth that was surprisingly impressive at plus 0.7%. So really, France, after a quarter one positive, we're back to kind of where we were, and for the previous sort of 1.5 years there was zero growth, and so we're back to zero growth. So pretty disappointing from France. Now we're going to get the Eurozone GDP figure at 10 o'clock. That's the Eurozone as a whole. Here we're expecting a figure of plus 0.4%. If I just show you the chart for this. This is the picture for Euro. Oh, sorry, that's inflation. Hang on. Here's the Eurozone GDP chart. Apologies. So we've had quarter one growth of 0.4. You could say this has been consistently underwhelming, is probably the right word. In that at least we've got growth, but it's virtually nothing. This is not growth that's going to get anybody excited, and so we're expecting more of the same, plus 0.4% for quarter two. But because Germany missed expectation, they account for 30% of the Eurozone. Because France missed expectations, they were lower than expected as well. They're about, I'm not sure, they're about 20% perhaps of the Eurozone. So, net, you're most likely going to see the Eurozone figure at 10 o'clock disappoint and come in below expectation. So plenty of more GDP figures to come. The German one was worse than expected, but you can see actually the DAX has just lifted up through the pivot level, which had capped the upside so far this morning. So you're getting a new high. You're getting the euro-dollar push below its pivot level. So we seem to have a reasonable inverse correlation going on here between the euro and European equities as it stands. So the pivot level on the S&P had also presented a good barrier throughout the Asian session. We've just ticked up through that. So maybe this China thing, the currency's stabilized. Maybe this has just helped to calm the situation. Also, we've got Greece voting. Well, not quite yet. The Greek Parliament are still negotiating. We're expecting a vote by midday. This is a vote on all the massive raft of additional reforms that are required in order for them to qualify for their third bailout. They've been talking through the night, as you can imagine, and so We're most likely going to get, we almost certainly will get a positive outcome with a decent majority voting through the reforms, but it will be only on the basis of the Syriza party making use of the opposition votes. But that's expected to go through today, and then we're going to get the Eurogroup meeting, which is going to go into probably the late hours tonight. Okay, so we've got more Greek developments coming through the day, but firstly we've got to get past the Greek Parliament vote, which is any time between now and kind of midday, and is expected to be a monstrous surprise if they didn't get this voted through. It's almost certain they will. It's just how much damage will Tsipras take from his own party, and what's the likelihood that we're going to get a snap general election as a result. Okay, let's move on, because let me just take you back to the calendar. Other stuff this morning. So 10 o'clock we've got inflation figures from Europe. These are final readings for July. Okay, we had the preliminary numbers, so now we're going to get updated final numbers. Okay, now looking at this on a year-on-year basis, we're expecting plus 0.2%. So we're expecting this number to be confirmed at plus 0.2%, as it was reported a couple of weeks back. So these final readings, less important than the preliminary numbers. We might get an adjustment here. We'll obviously have to wait and see, but most of the time the final readings aren't different to the preliminary. On the month-on-month one, though, we're actually expecting excuse me, for some reason so we're expecting minus 0.6% here on the month-on-month basis, taking us back into negative territory for the first time since the start of the year. Just highlighting the fact that this deflation risk, most notably in the Eurozone, is not behind us, especially in peripheral Europe, where you've got most of the periphery still in deflation. So you're going to get most likely a negative print on the month-on-month basis for headline CPI. This is for July. We've had a collapse in commodity prices again. It's going to lead us into an extended deflation problem, and this isn't just in the Eurozone, it's globally, and in certain sort of Far Eastern economies, you've got major problems with the deflation risk, and perhaps this kind of comes back to this idea that the global growth story still remains pretty bleak. I was reading this morning the Atlanta Fed US GDP tracker, which has become the most credible GDP tracker out there, given its accuracy back in Q1 of 2015. The Atlanta Fed GDP tracker for Q1 was way out of line. This is ahead of the data being announced, was way out of line with any other tracker, and turned out to be almost exactly right. So all of a sudden this Atlanta Fed GDP tracker has become the one to monitor, and it's currently printing for Q3 US growth just 0.7%, which is phenomenally weak. And so we still do have a outlook for the globe which is very weak from a global growth point of view, and the disinflation environment continues and maybe gets worse because of this recent massive cycle lower again for the commodity space. Let's just quickly point out the fact that we've got a lot of data from the US this afternoon as well. So starting at 1:30, producer price inflation numbers. We then have 2:15 industrial production. We then have 3 o'clock University of Michigan consumer sentiment. Okay, so some decent numbers out of the US this afternoon to get things moving and to finish off the week. So that's the kind of data that we've got to look out for. So as I've mentioned, maybe the Chinese currency stabilizing has just calmed global markets overnight. We've got a little bit of positivity going here on the European equity space, despite the fact Germany and France delivered worse than expected GDP figures. The bond markets are pretty flat. You've got the euro just taking a move down below the low of the session. Let me just check in. Yeah, cable's kind of doing a similar thing. Having popped, it's been it was a tight range overnight, but we popped to a new high for the session at 10 past 8, and then here we are just half an hour later making a new low. So it's a little bit choppy in here at the moment. But keep your eyes on oil, which, as I can just see, is just drifted back below the $42 handle. So, maybe take your lead from crude oil here. We're still in this range, so yes, we are below 42 here, but the range that we've seen over the last few hours has kind of a lower around about 41.89. So very important where this market closes out the week. That weekly candle close, I think, is important from a technical point of view. And if it's below $42, this really just confirms the downtrend still in place. And who knows? If this BP refinery stays shut for any period of time, well then, $40, here we come. So, interesting times. All right, guys, enjoy the session. Thanks.